Hello, good afternoon, everyone. We'll get started here in just a moment. And while we wait, go ahead and let me know which part of the world that you're from. It's always interesting to see where you guys are coming from. Hey there, John. Hi, Vinny. A couple Johns in here. Hey, Graham, good evening. Hi there, Paul, Sally. Sally, I think you're going to get an update soon on that request that you had on Friday here. All right, hi there, Kim, Stan, Nadeem. Paris, France. Yeah, Graham, I know exactly where you're from, man. Netherlands, Indiana, Ohio. Awesome, guys. Charlotte, North Carolina, New Jersey, California checking in. Yeah, another Ohio, Tulsa. A couple Londons in here. Awesome. Oregon, Maine. I don't get too many people from Maine. Welcome, Lewis. All right, H-Town. Good stuff, guys. Good stuff. Washington, Texas again. Texas always tends to represent well. All right, guys. We're going to get started here in just a moment. Just bear with me a second. Just making sure that everybody is logged in and ready to go. All right, awesome. All right, guys, is my audio coming through okay? I just want to make sure that it's loud and clear, it's not muffled or anything like that. Jerry says, home of the World Series bound Astros. Yeah, it's gonna be a fun series. All right, good. Well, guys, let's, without further ado here, let me get situated. Let's go ahead and get rolling. So first of all, myself and everyone here would like to thank you for letting us be a part of your trading journey. To give you a little bit of background, guys, on who I am, and again, welcome to the 5-day online trade setup workshop with Indicators and ARC AI. Jim is going to be with me this week. He's not here today, but for the VIP guys, he will be here tomorrow morning. So for everyone that's been here in Asif, hello, my friend. For everybody that's been in past workshops here as well, I got a little smudge on my OCD is kind of flipping out here. I got a little smudge on my screen, driving me nuts. All right, there you go. For those of you guys who've been in workshops here prior, we had a 7:30 a.m. Eastern start time. That shifted. Now we're starting at 8:30 a.m. Eastern, and we'll go to 11:30 a.m. Eastern. So Jim will be with us tomorrow morning at, he comes online about 10 a.m. Eastern time, and we'll talk about his setup there and just kind of talk shop. It should be a lot of fun. So again, thank you guys for letting us be a part of your trading journey this week. It's gonna be a lot of fun. To give you guys some background on who I am, once again, my name is Kyle. I'm the head trader here at Indicators, and I've been trading seriously for a little over 14 years now, which means I got started right on that big market crash back in the day. So I've seen quite a bit in a relatively short time trading. I've traded with hedge fund manager, prop firms. I even spent some time working at Tesla for a bit, traded large accounts, small accounts, and everything in between. I've traded with folks who are very successful and folks who weren't. So I'm very aware of the struggles in trading. And my goal this week, and I'm sure Jim's goal as well, is to provide some insight into your trading and hopefully help you guys take that next step. So over the next 5 days, we want to give you guys actionable trade ideas and strategies to implement on your own right away. And we've broken these strategies down to make them as easily digestible as possible to get you up and running as quickly as possible. So ask as many questions as you'd like, because that's what we're here to do, is help you guys out and put you on the right track to whatever your version of trading success is. Everybody's got a little bit different, right? So we only have one rule when making questions or comments, which is to be kind, be helpful, or be gone. You may not realize it, but we have a wide range of traders here, from brand new traders to highly experienced traders. Traders with just $1,000 accounts or even sim accounts, to traders with accounts well worth a few $100,000 or more. So this means that we want to create a supportive environment where everyone can get what they need from the workshop without any judgment. So here's how each session is going to work. This session is going to start at 2 p.m. Eastern every single day this week. And we're going to use this same Zoom link that you signed in with today. And this session is going to break down the day's strategy and the idea behind it, all the prep that you need to do, and the how, where, and when to trade it. And again, for those of you guys who bought that VIP access, every day from tomorrow till Friday, we're going to start at 8:30 a.m. Eastern time and go to around 11:30 a.m. Eastern time. So you know, I'll take the first half of the session. That starts at 8:30 a.m. I'll take it to 10 a.m. and then Jim will go ahead and pick it up at 10 and bring it all the way to 11:30 a.m. Eastern time. You guys will see Jim again tomorrow morning. This session can include live trades, a recap of the strategy, answer any questions in a smaller, more personalized setting, and then you can set up the rest of your day from there. If you guys have not, let me go ahead and find that link here. If you guys are interested and you haven't purchased the VIP access yet, or you have any questions about it, just go ahead and let me know. For those of you guys here, we're going to send it out to the here. Go. Yeah, so that is the VIP access link if you guys are still interested. Again, it's 3 hours a day starting tomorrow morning, so it's pretty much a trading brain dump between myself and Jim. It's pretty fun, really laid back. It's a smaller group, so it gives you guys a lot of chance to ask any questions. We'll talk about trade setups, take trades during the session. You kind of get to see the nuances in there as well. You know, for everybody that goes through a workshop without fail, they get to the end of the week and they're super happy they bought the VIP. Some folks will actually buy the VIP and the recordings at the end of the week to go ahead and watch them. You guys are gonna have access. Every session is gonna be recorded. This session and the VIP session, you guys will have access to those for life. So for those of you guys who've been doing this workshop now for a couple of years, and you guys, you know, if there's something that I said or something that somebody said, you know, a year ago, you guys can go back and watch it. There's no time limit on it. You guys have that for life. So that'll always be there. Let's see here, see that. Yeah, all the sessions will be recorded. Yeah, Jerry, won't be able to stay for all VIP tomorrow. Will it be? Yes, every session will be recorded. You can watch these on your phone too as well. You can just go ahead and log into Zoom through your mobile phone and watch it. But yeah, it'll be recorded. And we usually get the recordings posted, you know, within a few hours after the session. So we're pretty quick about it. We try to be, at least if Zoom lets us. We upload it to, you know, our server, and then it should be available within about 2 to 3 hours afterwards. Depends how long it goes. Sometimes we've had sessions that last probably like 4.5 hours. All right. So at any rate, all right, guys. As far as so the first day here is a little bit of orientation to make sure you guys are set up. And I just want to go ahead and walk through the member area here with you guys real quick, and then we'll get right into this setup here. So when you go to ninjacators.com, that's where your member area is going to be. You're going to log in here. You might see a login button here. If you're having trouble logging in, you can do forget your password and all that. If you have any trouble at all, you can always email our support at ninjacators.com. There you go, support at ninjacators.com. All right, and then you come into Ninjacators, you go to dashboard. All right, and we're going to go to workshops. All right, and then you'll see, let's see here. Yep, you'll see the 5-day trade setup workshop here. You'll see the VIP. So if you have access, if you purchase VIP, you'll see this. If you didn't, you'll just see this. All right, so we'll come in here, and the recordings will be posted here. So you'll see welcome, then day 1. You see video coming soon right now. So what we'll do is post the recording here as soon as it's ready. There's a Flip Trap setup PDF download here. For Jim tomorrow, he'll be back here at 2 p.m. Eastern. Again, he'll be here actually at 10 a.m. Eastern in the VIP, but here he'll be back at 2 p.m. Eastern and talk about the smart money structure setup. And then we'll post his recording there. And there's his PDF download here as well. All right. So there's day 1, 2, 3, 4, and 5. And then for the VIP guys, going to go back to that. Those recordings will be posted similarly. So you go to trading session 1, and you'll see that video posted here. All right. Anybody having trouble with the member area or anything like that before we get rolling? Going once, twice. All right, I think we are set to go here. All right, guys, so you saw that if you guys still want to be part of the VIP, that's in the chat window there, so you can go ahead and sign up. If you didn't get it, just let me know and go ahead and repost it here. Well, let's go and get through the disclaimer real quick. All information in this webinar is provided for educational purposes only and is not offer or recommendation to trade futures, stocks, options, or forex. All right, guys, let's go ahead and get into the first setup for this week. We call it the flip trap setup, and I'm going to go ahead and turn my camera off here so you save some bandwidth here. All right, so the first setup is called the flip trap setup for the week. This is a setup that I use all the time. I love teaching it, and I love trading it because I love the psychology behind finding these flip trap types of setups. If you guys are familiar with order flow or you're not familiar with order flow, it doesn't really matter because we broke it down to make it real simple, but it has kind of its origins and its basis within order flow type of trading. So Jim is going to probably talk about that later on this week. I got a peek into his setups. I'm sure you guys did too. A lot of volume profile, order flow type of commentary through there. So I'll kind of leave most of that there for him. But the flip trap setup, back in the day, I come from an order flow background as well. And one of the things that you're always looking for is, and one of the things that you notice if you're an order flow trader is that when price goes to certain areas in the market, you'll notice that there is a spike in a big reversal, and traders will maybe are looking for a specific area and they try to pile in at that area, and all of a sudden the market starts turning around and going against them. I mean, how many times have you guys been a part of that? I've been a part of that, right? Where the market is moving and you get into the trade, it came down to a key location, maybe it's a breakout trade, you've been waiting for this, and then it breaks out and like, okay, we're off to the races, all of a sudden turned right back around and starts moving against you. That's happened to me quite a bit in the past. Every once in a while, we all get caught in a trap from time to time, whether it's something that's news related or you're trading just at a tricky area of the market. But this setup is looking for to kind of turn the tables, right? Instead of being that trap trader, you're going to look for those traders that are going to be potentially trapped in the market. What I like about the setup beyond that is that when you do find trap traders and you get a good trap going, they can be explosive trades. They can be trades that really move the market. And I'm going to show you, I'm going to go through the charts here in just a second. But essentially, it's a simple and easy way to take advantage of just those trap traders at 4 key levels in the market. Now, we have a few of you guys that have been through this workshop before, and you guys have taken it a step further, and I take it a step further when I'm looking for these flip trap setups. We're going to start you off by looking at 4 key levels, which is the prior day high, the prior day low, the overnight high, and the overnight low. However, as you progress in your trading, you're going to notice that there are certain key areas in the market where you're patient, you wait for the market to approach these areas, and then instead of actually looking to trade in one direction, you start looking for traps. You're going to look for a fake out and a move in the opposite direction. You can use this we're going to use this for day trading this week, but you can use this for scalping. You can use this for swing trading. Matter of fact, I have a setup. I'm watching the euro right now. It's a currency, and it's more forex based. But yeah, you can use this in futures. You can also use this in forex. To an extent, I think you can actually use it in stocks as well, more on a longer term swing trading type of basis. When you could probably do it on an intraday basis as well, but I found the success comes better on more of a swing trading basis when it comes to stocks. But yeah, you can use it across markets. This theory, this kind of setup that we're going to talk about is pretty versatile. All right, so we're going to mark these key levels on your chart where traders must make decisions that are typically at extreme levels of the market. Now, ideally, you'd like to see traders break this key point in the market, then reverse back on itself for a trade opportunity. So using a long trade as an example, you would mark a key level in the market, let's say an overnight high, wait for a price to break that level, then wait for the market to reverse, for instance, a fake out, and then go ahead and execute the trade. Now, I'm going to go ahead and go right into the charts here. You guys have the PDF here. I do have PowerPoint here as well, but I like to instruct right from the charts. So let me try to look at a market that's a bit cleaner. I got here. Give me one sec. So I got a grid of charts here. I'm just taking a look at here. We had a few flips fire off today. I'm just looking for a good one here. So Russell actually did have a pretty decent. We're going to stay there. All right, let me just let me take some stuff off. You guys don't get too confused. All right. So the 4 key levels that we were looking at. So I have a daily chart, I have a 30-minute chart, and I have a 10-minute chart. These are now, and we're going to look at lower time frames. You can do this on a 3-minute chart. You can do this on a 5-minute chart as far as execution goes. But this is typically what I'm going to be looking at throughout the day. As a matter of fact, what I may do is just flip this to a 10-minute chart. Let's go ahead and do that now. And we'll put this as a 3-minute chart. All right. All right, so I'm going to go ahead and type in here the 4 key levels that we are looking for. So we are looking for overnight high. All right, let me go ahead and finish filling this out here. Low. And we will go ahead and make the font here a bit bigger. There we go. So again, those are the 4 levels that we were looking at. And so when you're looking at here on my chart, that's exactly what these lines are portraying. I'm going to show you, these lines are automated for me. We have a tool that we use for this, but you can do this manually. You don't have to have the tool for this. All right, so the purple line that you see up here, all right, let's go and blow up this chart here. This is the overnight high. All right, the red line here is, the overnight high. This purple line down here is the overnight low. This green line is the prior day high, and this red line here is the prior day low. All right, so this this orange line that you see here in the middle is just the prior day close. I think it's actually pulling from a couple days ago. But anyways, let me go ahead and hide all these. I'll show you guys exactly how to find these levels. All right, so the first thing that you need to do when you go ahead and load up these charts is go into your data series here, and you see I'm on a 10-minute time frame here. And then go to trading hours break line. And if you're using NinjaTrader, this is exactly how you do it. If you're using other platforms, what you want to see is you want to see when every session begins and ends. So the important times to note are going to be the 6 p.m. Eastern time, which is the overnight open, the Globex open of the overnight future session, 6 p.m. Eastern time. And then 9:30 a.m. Eastern time, which is the New York open, cash open. All right. But as far as this vertical line that you see here, it's going to be very important. Set this to all sessions. All right. And that's going to give you this vertical line that you see here. And if I go into the vertical line, you'll see that you have the 5 p.m. cutoff, and there's 6:10 p.m. So again, the market opens right here. All right. So it's important that you do that. The next thing that we want to go ahead and do is look for let's go ahead and look at the prior day high and the prior day low, right? So when you look at this session here, which is a couple of days ago, that's on Friday. I would not use Sunday. So I get that question quite a bit. I would not use the Sunday open. I would look at Friday's prior day high and or use a Friday high and Friday low if you're going here on Monday. All right, so that's the prior day high. Here is the prior day low. You're just looking for the absolute high and the absolute low of that day. Steven's asking, so what is the tool that you use to draw those open, close, high, low lines automatically? It's called turning points. We have that in the shop. You can do these manually. You don't need a tool for it. It's just easier to use a tool. I'll give you the link here if I can find it. That's it. You guys can check this out if you like. Here you go. Jerry says, I use current day open high low to make it easy. Yeah, so NinjaTrader does have an indicator here that will do current day open high low. All right, so you can see the current day is high, the current day is low, and the open. You can even put in prior. So there's a prior day open high low close. All right, so you can use that as well. The reason I like turning points and I don't use these is just because of the overnight session. The overnight session is, let me go ahead and show you my turning point. So the overnight session starts at 6 p.m. Eastern time, and then it goes till 9:30 a.m. Eastern time. Now, I know for a lot of folks, they'll go ahead and look at the 8:30 a.m. Every time I'm going to use is going to be Eastern time. But a lot of folks will look at, let's say 8:30 a.m. Eastern time, or you have even, crude oil when volume kind of picks up, around 5 or 6 o'clock. Look at that time. For us and for this strategy, 6 p.m. is going to be the start time for the overnight session. 9:30 a.m. Eastern time is going to be the end of that overnight session. And there's a reason for that, because the overnight levels can move, right? They can, especially if the market is trending very hard overnight, that overnight high can take up higher. I'll show you how to handle that. But those overnight levels can move prior to that 9:30 a.m. open. But right at 9:30 a.m., maybe sometimes even a few minutes before that, but right at 9:30 a.m., those levels remain locked in place. And then you can use them as, potential trading levels throughout the day. But after 9:30, the overnight levels lock in place. But prior to 9:30, they do have the potential to move higher and to move lower based on higher highs and higher lows. All right, so 6 p.m. Eastern time is the start time for the overnight session. 9:30 a.m. is the end time for the overnight session. All right, let's see, he says the built-in NinjaTrader open high-low clotheslines tool works pretty well too for when you're getting started. Yeah, it does. Yeah, and it's free. Oh, well, it's included in the NinjaTrader package. It just doesn't include the overnight levels. All right, then you can see my day period is 9:30 to 1600 or 4 p.m. And then I just have the close in there. But, all right, so we have the prior day levels. What I'm going to go ahead and do is change the color. And so it lines up. So this one's going to be red. And then this one, I'm sorry, I should flip it. Green. This one should be red. All right. Okay, prior day high, prior day low. Now we're going to look at the overnight levels. All right. All right, so here is, all right, so this is 6 p.m. All right, 6 p.m. yesterday, yep. All right. So that is the overnight high. And I'm going to go ahead and take that line and make it purple. All right, that might be a little bit dark for you guys. Let me make that a little bit lighter. There you go. That's the overnight high. And this is the overnight low as put in at 450. Now, what I mentioned a few minutes ago is, all right, so let's say you come in Sunday evening at 9 or 10 p.m. Eastern time. And right off the bat, you see that the market from the open, you have this big open here, but it starts to just kind of trend down, right? So initially, your overnight level is going to look like this, right? And then as you're going to see the trend progressing here, starts to move down here, continues to move down, and whatnot, right? And so you have a level here. There's actually a couple of flip trap trades here. So there's actually a couple trades off of this level. We'll talk about that here in a second. But then it continues to move down, all right, until it finally makes its low that it gets locked into here at 4:50 a.m. Eastern time. All right, the market comes up here. Let's see, 9:30 is right in here. All right, so at 9:30, at this point of the market, these levels will go ahead and stay locked into place. All right, these overnight levels would stay locked into place. So as you can see, we made a new low here, but the line does not move down. All right, this will be the overnight low for the day. For the rest of the day, this will be the overnight high for the rest of the day, right after the cash open. All right. Before I go any further, do you guys, I'm going to go ahead and talk about execution and setup and all that stuff. But do you guys have any questions so far before I continue to go forward here? James is asking, what is the name of the built-in indicator? So you have a couple. You have the current open high low. All right. And then you also have, and I don't, this itself wouldn't be useful so much for this strategy. What you could do though is use the prior day open high low close. So if I'm using the prior day open high low close, what I would do is, I kind of like to know where the close is, but for the strategy, you don't really need it. I would turn off the close and then turn off the open and just keep the high and the low. All right. And then hit apply. And then you can, yeah, it'll go ahead and plot the high and low, or at least the prior day high and low, as you can see here. And then you can go ahead and put it in your own overnight levels. So that would be the only manual process, is the overnight levels that you would have to do. But the prior day high and low would be automatically done. So you just have to worry about two levels. Go ahead and put on your chart. All right. So, and quite frankly, and you guys have been to prior workshops, I started using the turning points probably a few months ago, maybe 6 months ago. Maybe it's been a while, but it's been a while. But prior to that, I was plotting the manual. So again, you don't need turning points to go ahead and do this. You can just do all this manual. All right. So everybody's still following me, I gather. All right. No questions or anything so far? All right. All right. We'll keep on going here. All right. So after you've plotted, you have your overnight high, you have your overnight low here. And you know, you see the cash session started here. You have the prior day high here. All right, I'm going to just delete this indicator. Now, you have the prior day high moving through here. You have the prior day low that's well down here. All right, all the way down there. What we're going to look for next, is for price to pierce one of these levels. All right, and again, ideally, most of the times, most of my trades are probably going to be at the overnight high or the overnight low. It just happens to work out like that. It tends to be kind of at extreme levels. Now, if we fly down right now to the prior day low, that's a really extreme level here. It moves out of current price action and way down here, so 1695 here in the Russell. So I would certainly look to go ahead and trade. You know, that's an extreme level in the context of today's market. So that would definitely be a tradable level. But a lot of times my setup comes off these overnight levels. And here's the setup right here. So we had the overnight low here. All right, the market came right back up. It came right back down and retested. And this is the trap right here. This is the trap that I'm talking about. All right, this is the Russell, but again, you can do this on any market. You can do this on the ES. We'll probably be looking at the ES mainly this whole week. I just had the Russell loaded up here, so I just kind of stuck with that. So forget the name of the market. You can do this on the ES, on the NQ. I'll show you a setup in the NQ right after this. I think I'm sure if the YM also had. I think the YM also had a setup. Oil had a nice setup. Let's see, gold had a couple of really nice setups off the level. But we'll talk about that here in just a second. All right, so in the Russell, this would have been the candle. All right, so here's the key level, the overnight low. We pierced this level, 1731.70. You guys are following along here. There we go. This level right here. We pierced it, and then we closed back above it. Now, the entry candle, where the close is in the entry candle is important to me. I don't want to see a close. So let's say that this candle, let me see if I can draw this out. All right, let's say that this candle had a close like this. And you know what? Let me see if I can change the color of that. That's one more time. right, so let's say that the close of this candle was right here. Right? So we pierced the level, we had a little wick, but the close is right below that level. In this case, so that close is below the level, I am not interested in taking this trade. Is there a trap there? Potentially, right? But the close is below the low, that the overnight low here at this point. The buyers weren't strong enough to move this level pretty much out of the hole, right? They weren't strong enough, and especially like in a 10-minute candle, they weren't strong enough to, get the close at the very least above this level here. And that says something to me. All right, that says that the buyers there just may not be aggressive enough. They may not be motivated enough to go ahead and execute to try and push this market higher. The volume might be low. There's probably not that much interest from the buyers at this level. So if the close is below this overnight low in this candle, I'm not interested in taking the trade. Ideally, what I'm looking for is just like how this happened, is this close. All right, the close is actually right here in the prior price action. All right, you see how if you look at the close here, right, see the close is right. Let me just mark a level there. See how that close is above these little lows right here, and it's above this price action here. That's important to me. The buyers came in aggressively at this level, drove this higher, and had to close one above the level, but two in the prior price action here as well. And now think about it. If you are looking to go ahead and go short this market, all right, and you see a break of that level there, and let's say you had orders to go ahead and sell. And I know some traders do, because I've seen it in the order flow footprint before, where they have whatever strategy they're trading, or maybe they're just aggressively bearish in the market. They say, if it breaks the low, I'm going short. Breaks the low of the day, the overnight low, I'm going short. This market is going to go ahead, especially if you have you have just a super bearish attitude or super bullish attitude in the market. And it catches you short here, you're feeling good. All of a sudden, within a few minutes, it's right back into this area here. Right? It doesn't matter if it's a red or green candle. It doesn't. It doesn't matter if it's a red or green candle here. All right. I'm just looking at the wick. All right. I'm just looking at this wick and where the close is. It reversed right back into the price action here. If you are short here in the market, you're feeling the pain right now. You're sweating bullets. You're starting to get religious real fast, right? You start praying, offering up sacrifices, whatever the case is, but you don't want to be short. You don't want to be short here. So where you would park an order, or where you place an order into the market as far as taking advantage of this candle here, you would put an order at the high of that candle, all right? And ideally, if risk allows it, and this is a 10-minute chart, I'll show you set up here on a smaller time frame, but you would put the stop at just a few ticks beyond the low of this candle. All right, again, on a smaller time frame, you could probably tighten up the entry a bit more. We'll talk about that. But for this setup here, you would go ahead and get long, put an order at the high of this bar. All right, the bar that pierced the level here, this is where you go ahead and place the order, and then you get picked up on the way back up, and there's 1.5, and getting a little bit closer to the 2R there. All right, but that is essentially how you play it. And again, this is a 10-minute chart. I'm going to show you another chart on other markets, other time frames. I'm going to show you all that here in just a second. But that's essentially how you would take advantage of that. Place an order here at the top. And the reason you place an order here at the top and then not right here at the close of the candle is that if you just want, you can go ahead and get picked up by momentum going in the opposite direction. So as a market starts to pick up momentum going higher, then you'll be able to get picked up on the way up. If you want to be aggressive, going in at the close of the candle, certainly an option. This is a nice reversal candle. One of my favorite bars, one of my favorite candles is a candle like this. It's kind of like a hammer candle. You see shooting stars and all that here, but the longer the wick, a lot of times the better. But what happens, and the reason, so one of the questions I'll tend to get is, well, why do you put it at the high of the bar? Why don't you just go ahead and get in at the close? What can happen from time to time, especially on a reversal bar like this, is you will get a reversal bar like this, all right? And then the market will just start doing, let's go ahead and get this here. We'll just, after this bar like this, it starts doing this kind of choppy action. It starts to move down, and then it finally starts to go, all right? After, and this is a fairly sizable bar here as well. I don't want to be caught up in this, all right? Because a lot of times we'll do that. But once it breaks out of that, then I want to be in the game, right? So you get these big reversal bars here. You'll kind of see this chop. I don't want to be a part of that chop. I'll place an order at the high and get picked up on the way out. So that's why I place an order at the high, or I prefer to place an order at the high and not just simply at the close of the candle. However, if you're more aggressive, and sometimes I am, depending on where the market is, sometimes I am, I'll go ahead and execute that trade there. Mary's asking, is the reverse pattern piercing the high treated the same? Exact same, Mary. Yeah, we'll look at some other setups here, but yeah, exactly the same. Paul says, how do you set up the take profits indicator, the one that shows stop and take profit? Yeah, you're talking about this here, Paul, this indicator here. Yeah. So I know you're part of Signal Lab, Paul. So if you, this is for Signal Lab members. If you go into Signal Lab, and I think where you download the Signal Lab file, you should be able to see this file there. It's a zip file. So what you would have to do, Paul, is you would have to come in here, go to Tools, and then import NinjaScript add-on, and then add that file in. And then once that file comes in, you don't have to restart NinjaTrader. It'll be within your drawing tools. It won't be in your indicators. So don't go there. It'll be at the bottom of all your drawing tools. It's called Lee's risk reward position sizing. James says, is there going to be any kind of trade setups, cheat sheets? Yes. If you go to the member area, James, there's a PDF located there. Let me see if I can grab it for you here real quick. All right, so here's the cheat sheet right here. You can go ahead and download that, and then you'll have this one's a bit different. This one actually takes it a step further, looking for these key levels, not just the overnight high and low, but the concept still remains the same. All right, and what I'll do is I'll put this into the Zoom chat to save you guys a click here for you. I have to circle back. Yeah, for some reason it didn't go to my download folder. But yeah, it's in the member area. Sorry about that, James. If you go there, you should be able to find it. Nadeem is asking, how do you set up all the drawing tools on the left side of the chart? So Nadeem, yeah, if you come into the member area, so it's actually kind of a bonus, extra kind of gift for you guys. You can go ahead and download the Advanced Drawing Tool Suite. Go ahead and download that and install it. This video will walk you through it and gets you all the drawing tools on the left side. All right, so yeah, that's what's called Advanced Drawing Tool Suite in the member area, and bonus number 1. Yep, no problem. All right, let's go ahead and continue to move along here. Take a look here. Let's drop that down. So again, those are the 4 levels that we're looking at. As you can see here, on a 3-minute time frame, so this is something that you'll notice here as well. My preferred time frame, I really like trading the 10-minute chart, especially with this setup, just because sometimes I got a lot of things going on throughout the day, so it's easier for me to kind of manage and watch things going on in a 10-minute, execute trades off the 10-minute chart. However, this is it on a 3-minute chart. This is the same setup that was here just today here at 10:30. All right, you can see that we pierced this low here, but we did not have any type of reversal candle or anything like that. So on a 3-minute basis, there's really not a whole lot to take advantage of. You actually had to close below the level, had a little reversal candle here, and then move out of it. But there's really no reversal candle here. We can take a look on it, see what it looks like on a 5-minute. Even on a 5-minute, you can see it pierced that low and actually closed above it, so it looks a bit better. I like to see a little bit more of a wick here, but on a 5-minute, it doesn't look as 10-minute is pretty much ideal. On a 5-minute, we pierced that low. We did close just above that level. But if you remember what I said, I like to see this low close within prior price action right here. So this one here, if I were to give it a rating, 1 out of 5, I would say this is probably like a 2, maybe a 1 out of 5, probably a 1 out of 5 setup. Not too ideal. But again, if I was looking to take this setup, again, the same entry, I would put an order there at the high and then get picked up on the way back up. There is a second entry. I don't want to get too far ahead of myself and confuse you guys too much. But when you have a nice reversal candle like this, and let's say you missed the setup, let's say you have a beautiful reversal candle like you see here or here, and you'll see this in a lot of different scenarios. I'll see if I can find another setup like that. But if you have a strong reversal candle like you see here, let's say you missed this trade, a lot of times what you can do is still place that order at the high of the candle. Let's say the market moves off on a nice reversal candle, the market will tend to come back and retest the candle like you see here. Let's say that you missed it up here and it comes right back and retests the high of that reversal candle before moving off. So that's just another kind of trick that I use to try and take advantage of these trades. As a matter of fact, you see one right here. You see how this is the prior day close, beautiful reversal candle right here. The close is actually within price action. But you could do same thing. Let's say you missed that trade. Look where the market comes back to. Comes right back to the low of that candle, reversal, and that was a nice move to the downside. Again, this flip trap trade is pretty versatile. If you're using it for scalping or using it for kind of intraday trading, just to look for some quick moves in the market, like this one here, just this here real quick. All right, you see how, take this off here real quick. So you had we had the flip trap trade here, and then we came right back up. I don't have the prior day close here, but you see how we're kind of making new highs here. We reject off this is the prior day close, this orange line here, give you a nice reversal candle. And instead of, let's say you're kind of iffy on the trade, you want to see the market kind of show its hand, wait for that reversal candle to occur, and then place the order there. And that's a really nice reversal candle, again, at a key point of the market. But just kind of a little trick there. Jagdish, check on same on NQ. Yeah, let's go ahead and go over the NQ. I wanted to go over that anyway, so we'll do that now. All right, let's start from the beginning. And let's go ahead and plot our levels. Let's start on the 10-minute. All right, so we're gonna look at the prior day low, prior day high, in absolute levels here that we're looking at. And I am going to, that one green, this one red. All right, now we wanna look for overnight levels, so we look at overnight level there. We're gonna make this one here purple. As a matter of fact, I think we talked about making this one a bit lighter, didn't we? So let's go ahead and do that real quick. You guys can see it get lost. Go. And that is the overnight low here. All right. There we go. So this is the NQ. Let's take a look at it on a 10-minute basis. So the NQ, as you can see, it blew through the level pretty aggressively, and NQ we'll do this from time to time where it's just can be a tricky market to trade. It's a slippery market. It'll go through levels and then bounce right back out. It's like it'll hunt stops probably more often than you see in other markets. So if it's the personality of the market is different than even the ES, and sometimes you'll see stuff like this where you go ahead and pierce through it, and it's actually a really nice reversal candle that ends up happening. So in this one here, as far as the flip trap goes, and if you're just starting out, this invalidates the setup. Right? You do have you have price that actually pierced the level here. You did have a nice reversal candle here, but you can see that we're below the overnight low. So that would invalidate the trade here. This was actually a really nice reversal out of the hole here. However, the fact that we had a actually a couple closes right below that overnight low here, invalidates the trade. This would be a nice reversal trade. It's just at this point, since you have closes below the level, it just invalidates this trade. But if you wanted to bend the rules a bit, again, it would be the same thing. You got that reversal candle at an overnight low, and then the trade would look something like that. Now there is, and let me show you this, because when you're going through, and for all the folks that are overseas and are awake throughout the night, especially like over in London and whatnot, they're going to have overnight levels that do indeed change. So they may come into the market here, and let's say this is 2 p.m. or excuse me, 2 a.m. Eastern time, and their overnight level is going to look like this, and they're going to have a pierce here, right? And you don't have a close below it, but then you come right back and close within prior price action, not as high as you'd like, but then there could potentially be a trade right here, right? This didn't go very far on a 3-minute basis. Let's see what this trade looked like. See what it looked like on a 3-minute chart. Let's see, on a 3-minute chart, yeah, you had it close below the level here. So yeah, it wouldn't validate the trade there. So that wouldn't have been a good one there. It's continued to move down. Right, there was a low there. This wouldn't have gotten filled. There would have been no order there. And then you had the low here that we ended up putting in at 430. And then you actually had a nice little reversal candle right after you put in that low. So let's go ahead and go to that candle here. And there it is, actually. So this one wasn't a great one. We got to squeeze a few ticks out of that one, but not a great runner. This one would have been pretty good. So you had the overnight low put in here. In the candle, if you were on a 10-minute basis, again, you place an order there, but a stop just below that low. That would have been the trade there. On a 3-minute basis, it also had a good setup here. Again, we pierced the low, we closed way up here. So that would have been the trade there. As you can see here, see this reversal candle? You could have placed an order again at that high. If you missed it, came right back and retested it before moving off. But that would have been the trade there. And you can see that would have been a 4, 5, 6 hour type of winner. So yeah, that's the NASDAQ. This one wouldn't have been a great trade. Only got a few ticks out of it, maybe stopped out on that one. Nice trade here. And then this level, once you take this trade and all right, and you have that new low in here, again, it's prior to the 9:30 a.m. open. You go ahead and move that level down. That's the new overnight low. You still have this trade going, but now this is the new overnight low. All right. And then that's when you get this setup that really didn't work out too well. Actually, there was really no setup there. Nadim's asking, when do you change a stop loss to a trailing one when the market is going the other way? Okay, so how do you? So I'll answer the first question here. So when do you change it to a trailing stop when the market is going your way? So if I'm able to get 1.5 R or 1.5 times my risk, at that point I'll start trying to move my stop up behind price at that point. But I want to hit that first target which is about 1.5R. Want to go ahead and hit that first target, but sometimes it'll go straight to 2R if the market's moving. Sometimes these trap trades can move aggressively. But I want to hit that first target before I start moving my my entry up. If a trade is not working out, you know, so if it's not really up and moving within about, you know, depending on the time frame, if you're on a 3 minute, if it's not up and moving in about 10 minutes, maybe 15, if you want to give it that long, then I'll usually look to try and cut the trade, or, you know, maybe tighten up the stop on at that point. On a 10-minute basis, I'll usually let that trade work. If it's, you know, if about half an hour goes by on a 10-minute chart and it's still not moving, then I'll go ahead and consider moving my stop up or cutting the trade, just to save a few ticks. But that's typically after an entry. 1.5R, it's usually typically my first target. As soon as I hit that, I'll start moving trailing my stop up after I take that first target off. If on a 10-minute basis, or when you're talking about 10-minute or 3-minute, 3-minute, if it's not up and moving about 10 to 15 minutes, it's not coming out of the hole at that point, I may look to go ahead and cut it or move the stop up. At a 10-minute, usually I give it about a half hour or so, because I'm on a 10-minute, I'm looking at more of a day trade, looking to stay in that trade for a little while. On a 3-minute basis, or even on a lower time, let's say a 1-minute chart, I'm looking to get in and out of that market fairly quick. So this depends on your approach. And then your other part of the question here, how can you set up target 3 and 4 on the entry? So target 3 and 4, and I think you're talking about this calculator here, Nadine. What you would do is you go into the properties of the tool, and then you just put in 3 and then 4. So these are ratios. Let's go ahead and hit apply, and you'll see 3 and 4 here. And to make sure this comes up every time, just click on template, save, and then save as default. And so every time you draw this tool, targets 3 and 4 will come up. Yeah, let's take a look at gold. I'm gonna go ahead and turn the turning points on here. I think you guys are pretty familiar on how to find these levels here at this point. You can see here in gold that we had a flip trap here. There's a overnight low here at 5 a.m. Let's take a look at this here. You can actually see it here. So there's that 5 a.m. This one here, let's see, the low was 1648.40. Low here was 6, yeah, so almost the exact low. So you actually didn't really pierce the low here. You did pierce the low here. All right, so this was at 10:27 a.m. Eastern time today. It ends up being a doji candle, but what you did is you pierced the low and you came back and closed right here in the price action. Again, you place an order here at the high of the candle. Stop goes just a few ticks beyond the low, and this one just zoomed right off within a few minutes. You hit 2R, and then if you held it, it went it's like about 3R there. Let's take a look here. Yeah, just about 3R on that trade here. Here on a 10-minute basis, if you were to take this on a 10-minute, you can see that your entry would have been a bit higher. You probably just got about 1R. Yep, about 1R on that trade if you took it on a 10-minute chart. All right, so that was gold. Flip trap there. You saw the Russell as a flip trap there. Oil. Take a look at crude oil here. There's a flip trap right there. All right, so here it is on a 10-minute basis. All right, see it pierced this level, pierced the level here. All right, and it started to move back down. So here it is on a 3-minute chart. The entry looks to be maybe a few ticks off, but fairly close. Again, the entry would have been there at the low of that candle. That's the candle that pierced it. And there you got about 1R, and that's about it on that trade. You got about 1.5 maybe. Actually, maybe just shy of 1.5. That was a nice short trade there. All right, John's asking, how do these 4 setups you will teach this week work with other systems like the E-mini predictive trader? John, that's a great question. So the E-mini predictive trader and using this actually can be pretty useful, because with the E-mini predictive trader, what it's doing is looking at the New York tick, it's looking at Dow tick, it's looking at NASDAQ tick, and if you see those plotting extreme levels at a flip trap area, then, like, for instance, let's say in crude oil you're coming into this area, or even in NASDAQ. So I'll show you in NASDAQ here in just a second. But if you're coming into this area and all of a sudden you get those boxes printing, telling you that, you know, you're getting extreme tick readings as the market is moving higher. And then, so what will happen potentially is, some of you guys don't have predictive traders, so I don't want to harp on this too much. But yeah, you'll get these boxes here, John, giving you extreme tick readings, and then you kind of get this last exhaustive type of move. Right? So you have these extreme tick readings, you have this exhaustive move. Like, that would be great. That'd be a great indicator that this move is probably not going to last, especially if you're getting extreme readings before that flip move. Let me show you in the NASDAQ here real quick. And all you guys, what John and I are talking about is, if you have access to it, the symbols are, it's a caret. So let me show you here real quick. If you have NinjaTrader, so you have tick index, the Dow Jones cumulative tick index, and the NASDAQ cumulative tick index. So you hit the little caret and tick DJ, and tick Q. And so what are those are looking for is, if all the markets, all the issues, all the stocks are moving up at the same time, or are overwhelming a majority of them moving up at the same time, that's not a sustainable move. What tends to happen is the market will move to those levels and then hit an extreme and start to move off those levels. So my point there, John, is that when the NASDAQ, as is moving down here at 1010, I don't know what the tick index, what the tick reader said, but if you're getting extreme readings coming into this area, well, on a price action basis, you probably wouldn't take this. If you're getting those extreme readings in the tick index with E-mini predictive trader, and I don't know what it looks like during that time, it would green light this trade. If you're getting extreme readings here saying the market is extremely oversold, you get a nice reversal candle here, I would take that all day. Hopefully that answers your question, John. Yep. Jerry's asking, where's Lee's risk reward tool in Signal Lab? Yeah, let me show you that here real quick. All right, so when you come into Signal Lab here, go to initial setup, how to get started. So right underneath welcome. And then you'll see this blue button here, download Lee's reward to risk tool for NinjaTrader 8. That's where you go ahead and download it. Asif saying, you find blow-off volume helpful with this setup, Kyle? Yeah, Asif, thanks that's a great point. Yes. So blow-off volume, what is blow-off volume? So when you have an extreme move like this, or an extreme reversal candle, and then you have that coupled with a big volume spike here. So as we go throughout the week, especially if you're in VIP, we're going to talk about other setups beyond, what we see here in the workshop, because they all kind of tie in together in my mind. So there's a setup that we have called the exhaustion reaction. And so what that means in a nutshell is that you have these, let's say, like this extreme move here, right? So we come up here, we have this nice reversal candle, and that's coupled with a nice, now this is like 7:51 in the morning. You have a nice volume spike coupled with a nice long wick here. So this would be an exhaustive type of move, an exhaustion reaction is what we call it. And so if you can get a flip trap with a candle that looks like this, coupled with a spike in volume, those are typically nice reversal trades. So you can take that and then expand it out to even swing trading. Because right now I'm looking at, in the daily chart here, when we came down, we had this really nice reversal candle. The next day we had a pullback here. I mean, it was actually a pretty nasty day. But look at the volume on this reversal candle here, right? I mean, if I were to draw a line here, right? Let me bring this up here. You see how that volume spike is more than anything in recent history? Right here at that reversal candle. Typically when the markets move down and you're looking for, that reversal, like when is it going to go ahead and turn? There's a candle I mean, look at the volume in these moving up here. Almost no volume in this candle here, even low volume here. And as the market starts to pick up, there's high volume, but then it starts moving down and you have this capitulation in the market. So what the CEF is talking about, you find blowout volume helpful with this setup? Absolutely, because you're having kind of a capitulation in the market where the buyers are the sellers here in this case, right? The sellers are kind of shooting their last shot. If I were to draw a volume profile on this day here, I would suspect, I don't know this because, I mean, I have to go to this chart here and find this day, but I would suspect a lot of the volume here in this candle came somewhere down here, right? It came somewhere down here. And the sellers are pretty much, they're shooting their shot, or the buyers are super interested here at this point. And so you have this kind of exhaustive reaction. Sellers kind of come in, but buyers say, they come in with even greater volume, greater size, and they start, and they create this, what ends up doing is creating this reversal candle. But I would suspect that a lot of the volume came down here because of folks potentially trapped here in the market. So this is on a daily chart, but you can take that same idea to this here. So if you have a nice run up, just like you have here, the market is trending higher and trending higher and trending higher, higher highs, higher lows. You get to a key point in the market. All right, let's just say, it's not, I mean, I would say that's a better key point. But you had some interest here. You can see some buying and selling occurring around this level. All right, but prior to this candle here, the market's moving higher. And then all of a sudden, right here at the end, you have this big reversal candle, and you have this spike right here. Right, that's on a much smaller scale. When I say capitulations, in my mind, it sounds big, and it is, but just on a smaller scale on a 3-minute chart, it's a bit of capitulation, right? You have a nice reversal candle, nice volume spike, and the market starts moving down. So yeah, when you get to these flip areas, if you can couple the move like down here in the NQ, so for instance, this really didn't have a whole lot of volume relative to the volume around it. But if you had this move down here or even over here, again, not a whole lot of volume here, but if you had this move here and you had this volume spike that coupled with this low and this reversal candle, got to take that trade, 9 times, it's almost 10 times out of 10, you don't have to take that trade, right? Well, I'll say 9 times because every situation is different. But most times you have to take that trade. You get a reversal candle after a nice move to the downside with volume. So that's the blow off volume that a CEF is talking about. And I think it's that's when you see that, I think it's very helpful with flip trap trades. John saying for tomorrow's VIP session, will the flip trade be the only setup trade, or will the other setup be shown? Yeah, you know what, John? We're going to focus on the flip trap, but frankly, in the VIP session, it's kind of a brain dump. We talk about anything under the sun when it comes to trading, and sometimes that includes other setups as well. So, if we have time, we have space for it, or if we see a setup and we have the exhaustion reaction type of setup, yeah, we'll definitely talk about that in a lot more in depth. So yeah, we'll talk about all those things in VIP. But yeah, the focus will be on the flip. But frankly, as we go throughout the session, there's going to be something else that comes up. I'm like, you know what, guys, we have a setup for that. And it's just sometimes it's just hard to pass up a setup that looks so good, and I just end up teaching you guys about it. I'm sure Jim's probably the same way. Yeah, Steve, great question, man. Thank you for asking that. Yeah, I could talk about volume-based setups just all day. All right, guys. Do you guys have any questions? I know we're going a little bit over time here. I don't mind staying around, but I just want to make sure you guys, I just want to be respectful of your time as well. Any questions so far? Hey, Graham, yeah, definitely see you tomorrow, sir. Muhammad asked, do we still have a chance to enroll in VIP session? Absolutely. Let me get you that link. Let's see if I got it here. Oh, got it. 1 second. Robert says comment 6E 6:51 a.m. Central. Okay, yeah, absolutely. Let's take a look at the 6E. Man, I haven't taken a look at the 6E in a while. And I'll leave you. I don't know. Do you have any Forex guys here? The Deems. Yep. See you tomorrow morning at 8:30 a.m. Eastern time. Yep. Yeah. Any Forex guys? Just curious. Any Forex people in the room? See, loves Forex. All right. Well, let's see if I got some. I'll show you what I'm looking at here. I don't know if it occurred yet, but we'll take a look. All right. So 6:51 a.m. Central. So 7:50. Robert says, yeah, learning. Oh, that's awesome. Thank you, Robert. Great. Yeah, good stuff, man. Yeah, I hopefully I can leave you guys with a few tidbits. It's something to think about. I want to make sure I'm on the right candle here. All right, so yeah, we're talking about right here. All right, see a couple questions coming in here. Nadim's asking, by the way, this can be applied to stocks too. Yeah, on a swing trading basis. On an intraday, it can be tricky. It could be. I mean, if you're doing it in a stock, I would say it has to be really liquid. You know, for flip traps and whatnot, you know, it has to have some pretty decent volume. Like I wouldn't try this just on any stock. It has to have pretty decent volume in it. And I would do it more on a swing trading basis, right? Because in that case, it opens up a lot more stocks in my mind. Navjeet says, sorry, came in late. What are the solid green and red lines on the chart? Yeah, that's previous day high and low. Yep. All right, see you tomorrow, Navjeet. All right, so let's go ahead and talk about this setup here. Robert's asking about this setup here. So I think he's talking about this candle in regards to the volume, the blow off volume, right? And I think you're talking about potentially this area right through here. All right, so could this be a potential flip trap trade? So for the flip trap, so I would not look at this. I think, Robert, you can correct me if I'm wrong, if I'm not following you correctly here. But it says comment at 6E at 6:51 a.m. Central Time on a 3-minute. So this wouldn't be necessarily this wouldn't be a good flip trap type of setup. What I want to look for when I'm looking at flip traps here is, you know, I want to really hit an overnight high and an overnight low, especially on a 3-minute chart. On a 3-minute, I'm really particular. I really want to see it scream into, you know, a prior day high, a prior day low, the close of the prior day, the overnight high or the overnight low. The little moves here, even though you're retesting these highs, as you can see here, and you have a really nice reversal candle coupled with pretty good volume here. So like if this, so it's where the candle is that's giving me problems. Because if this candle was at the overnight low here, absolutely go ahead and take this. If it was at the overnight high, if it was at the prior day low here, if we got a candle like that, and it kind of did here actually, at the prior day low, with that kind of volume, absolutely go ahead and execute on that trade. My problem is just the location of that trade. You can see that if you're looking at it from an exhaustive blow-off type of reversal, you had a nice move here, chop, and then this is like the first candle, second candle out of the hole, right? So there wasn't really like a nice moving trend here. This looks probably news related. So that's another good point. If it's around news and flip trap occurs around news, I'm not too excited about those because you'll tend to have that kind of reset, that rebalancing in the market. So it's you know, what you see, what the kind of action that you see directly as news gets announced isn't necessarily what you should go with. You've heard, you know, buy the rumor, sell the news type of stuff. So the market will tend to move in a direction and go in the opposite direction. So this to me looks a bit news related. The volume is really nice. The wick is really nice. It's just a location of the candle in the greater scheme of things. You know, it's right here in the middle of price action. And then if you're in the middle of price action here, especially throughout the day, all right, let me just show you this here real quick. And Jim is going to talk about probably more of this throughout the week. Look at, I mean, there's a ton of volume right here in the middle of price action, right? And this trade is actually occurring right there in the middle. This is stuff that will happen in the middle of price action. Is you might get these big moves into this level and then move right back out of it, and then it chops around, it goes above the level, below the level, and that's just the nature of trading within high volume. You know, if just to kind of put this in real world terms, like if you're going into a marketplace, right? Let's say this high volume area is this big marketplace, and you're going in there and you're bumping shoulders with people. Yeah, you can buy things and sell things super easy, but there's just a lot of traffic there. If you go on the outskirts of the marketplace, it's much easier for you to move around. You can still transact things, but it's easier for you to kind of get from point A to point B. Whereas in the middle, you're kind of just bouncing back and forth. Probably don't know what's up from down. And that's kind of like what happens with price action when it gets into these spikes in volume. See how the volume really picks up at this price level? And that's exactly where you'd be trading at. It's kind of in that kind of choppy area that can just frustrate you as a trader from time to time. So I would stay away from this trade. It has good volume, it has good wick. It's just a location of it. It's just not ideal. So it's a kind of a long-winded way to answer your question, but this volume that you see here is the reason why I'd probably stay away from actually trading that. And you don't need that volume profile to see it. You can see it right here on the chart. The trade would have been right here in the middle of price action. So I want to trade at the extreme areas and not in the middle. As a matter of fact, let's see. We had this trade here. If you took it on a 10-minute, obviously would have been a stop out. If you took it on a 3-minute here, it will look like something like that. Yeah, you barely got 1R. But then it went up to the high here, and this is see how this one's kind of a middling trade? See how the close actually is above that prior day low? Take a look at this one here. And I haven't looked at this chart all day. First time looking at it. But that would have been a nice flip trap off the prior day high. And almost 2R, just about 2R. Just missed it there. Robert, hopefully that answers your question. Yeah, sure, no problem. No problem. Very welcome. Let's see here. James asking, so if the market does not make it to whatever might be lower, overnight low, let's say, but does make it to like the previous day high or low, you can use this setup. There it is good. Yeah, so if it doesn't, so like for instance, it's actually a good example right here, James. So here in the 6E, you see how the overnight high is actually up here? Well, we had a nice run into the prior day high. And the prior day high is right below the current day's overnight high. All right. So, and you actually had a nice setup here. So again, a move above the prior day high, came right back and closed within the current price action here. Closed actually right down here. And so you could have picked up this trade short. So yeah, this didn't get to the prior day high or the overnight high, but it did hit the prior day high. Let's see here. Yep, sure thing. Yeah, and as you guys kind of practice and take a look at it throughout the week, you're going to see little things that kind of click to you, and you kind of, I'm sure we'll get questions throughout the week, but we'll cross that bridge. Only day one. I'll be with you guys for the rest of the week here. So if you guys have any questions in your research and studying this, just let me know. Be here all week. The last thing I wanted to, for my Forex guys in there, which just seems to be a seed. So I'll leave you guys with this. So here in the euro, we'll see if it occurs. There's really nothing for me to do at this point, but just to kind of in the context of what we're looking at here today, and this is more from a swing trading perspective. Let me bring this chart down here. So yeah, look at the euro daily here. See how I had this high volume area, price moved out of it, came right back and retested. I think, you know, we could retest the low of this high volume area here, which would be right around the 99 area, right, which would actually be nice, actually just a few pips away from that, around the 99 area, but the bottom of that zone here. All right, so this is on a daily chart. Again, this is from a swing trading perspective. So I'm looking for a potential short. We'll see if it sets up. I'll have a lot of time to kind of see if the market will show its hand. But then I come down to the 60-minute basis, and yeah, we could have a potential flip trap right here. You know, I think we could probably may run into here, but let's say that we move above this high, and let's say we just, you know, within the next, before the end of the day here, you know, we come up above here, and then we've kind of flip trap. That might be a nice short to the downside here for the euro, and it's around a nice round number here, which the currency market's like. So we'll see how it goes. But you know, that's what I'm looking for here, and kind of tying in the flip trap with swing trading and currency here. We'll see if it comes back into the zone, and then we'll see if we can break this high, or maybe even this high here, and get a potential flip trap type of setup, flip trap short. So we'll see. And you can kind of see that here. See how you had the low here? Matter of fact, I got this trade. I got this trade on Friday, and I was actually hoping I could keep it into this week. I ended up picking the trade up here and then coming out up here because we broke this low here. See this low from back here? We broke that low. It retested within this high volume, which I don't want to trade, but it retested it. And so I actually traded on my broker, so I can't show it to you here on this chart here. But we ended up picking up the trade here and then closing it out up here. But I thought I'd hold this trade into this week, but it just happened. It just kind of shot off. The dollar just turned around pretty aggressively on Friday. But anyways, kind of tying everything together there. All right, get back to futures here, guys. I'm sure all the futures guys are probably snoozing right now. Yeah, Asif. So it's not exactly Pitchfork that I use. Yeah, it's not exactly Pitchfork that I use. I know Pitchfork people are kind of rare, but it's a form. I guess it's a form of a Pitchfork. So it's looking at volume and volume profile, but from a diagonal way. I might have to talk to you offline about it, but it's not exactly Pitchfork. It's just looking at volume, but if it was in a trend. You can email me about it. James is asking, I have so many lines on my chart. I plotted the previous day high and low. Is there a way to have Trade Navigator label them on the chart as a previous day high and low? I am new to NinjaTrader. Yeah, let's see. I'm not sure. I don't think the lines, the horizontal lines, can get labels. But let me see something real quick. Sorry, bear with me 1 second. Asif says, using the prior open, high, low, close, you can set labels. Oh, that's awesome. So Asif, Asif says that you can use, he built a tool that you can use in NinjaTrader, and then you can put labels on your chart. That's awesome. Thank you. Otherwise, what I was going to say is that, you know, you can use a chart text tool. Let's see if I can find it here. Oh, there it is. Yeah, you can use a chart text tool and then type in it like that, but that's a manual process, and then you're going to have to move these. I'm sure you can attach to, yeah, it doesn't look like you can. So let's see if you can draw those horizontal lines, and then it'll automatically label it for you. Is that right? I know we have an indicator that does something similar as well, which I can try to find, but I don't have it off the readily available. That's awesome. Yeah, guys, go check it out. Let's see if he's been around for a while, codes a lot of different things. Go ahead and check out. It's the AV H ray, horizontal ray, and you have the zone as well. Thank you, Asif. That's cool, man. Thank you. And for those of you guys that are new to NinjaTrader, let me show you. Let me give you this link here real quick. Sorry, we know we're going over here, guys. So I apologize. Hopefully, thanks for your time today. You can check out this page here. I should make sure it still works. There it is. Yeah. There is about a 30 to 40-minute video down here in the bottom, the beginner walkthrough, that will help walk you through NinjaTrader and kind of get you acclimated and get you used to using NinjaTrader. So you guys can check out that link. All right, and can you show again in the dashboard where downloads are? Sure. So you're going to go into dashboard here, and then you're going to go to workshops. All right, and you're going to go to the 5-day trade setup workshop. And then you're going to do the flip trap setup here. And then you'll see the cheat sheets are here. Is this what you're asking? I'm sorry, is this what you're asking for, Mark? Where the downloads are? You'll see the video. We'll post the video here, and then the cheat sheets are located under each day. So for date 1, 2, 3, 4, 5, relative to the day, you'll see the cheat sheets there. Is that what you're asking, Mark? Okay, perfect. All right, great. All right. Yeah, James, check out that tool by Asif. That's pretty cool. Thank you for that, and hopefully that helps you out. We have a tool here. I just have to track it down and see if I can get it for you guys. But yeah, it's a horizontal. It's probably very similar to what Asif has. All right, guys. Unless there's any other questions, we'll go ahead and leave it there. And then, yeah, Jim will be with us tomorrow at 2 p.m. Eastern time. So everybody just go ahead and use that same link, log back in. In the meantime, let me go ahead and drop that VIP link in here one more time. If you guys are interested in joining us, if I can get it here. Sorry, guys. Yeah, there's a purchase link for the VIP. You guys can go ahead and check it out. Yeah, we'll start tomorrow morning at 8:30 a.m. Eastern time. I'll go ahead and take the first hour and a half, and then Jim will come on and you guys will get to know him. At 10 a.m., he's going to talk about his first setup, and if any trades occur, he'll go ahead and take it. But he'll be back here at 2 p.m. to talk about his first setup. So, guys, let us know how you guys are doing throughout the week. This is a workshop, so you know if you just get incrementally better throughout this week, then it's a win. So, please let us know. Send in your questions. We're here to help. Thank you for your time here today, guys. And catch you guys, either VIP guys tomorrow morning or the rest of you guys tomorrow afternoon at 2 p.m. All right. Nadeem, you're very welcome. Yeah, we changed the time. Mark, we got a lot of West Coast guys. And so we always get complaints about it being too early. They're up at like 4:30 or 3:30. So yeah, we had you guys in mind. All right, guys, have a great rest of your afternoon. Take care.